Accounts and Investments Committee on the report of Auditor General on Homa Bay County Water and Sanitation Company for the year ended 30th June 2024.
Chairman.
Thank you, Honorable Speaker. Honorable Speaker, as I indicated earlier, we'll be taking the House through the report of Homa Wasco, Auditor General report on the Homa Bay County Water and Sanitation Company on the year ended 30th June. Honorable Speaker, I will start from the committee mandates. The Public Accounts and Investment Committee is a select committee established pursuant to the provision of Standing Order number 186. The committee is mandated to 1. Examine the reports and accounts of public investments. Examine the reports, if any, of the Auditor General on the public on the public investment, and examine in the content of the autonomy and efficiency of county public investment, whether the affairs of the county public investments are being managed in accordance with the sound financial or business principles and prudent financial practices. Honorable Speaker, the committee membership, the committee has a membership of 5 and the secretariat of 5. Adoption of this report. All 5 members of the committee adopted the report. Committal to the Public Accounts and Investment Committee. This report was committed on 25th March 2025. The Honorable Speaker notified the House the receipt of the report of the Auditor General on the Homa Bay County Water and Sanitation Company, Homa Wasco, for the period ended 30th June 2024, pursuant to Article 229(7) of the Constitution of Kenya 2010. The report was committed to the Public Accounts and Investment Committee, analyzed and report back to the House within the 3 months in consonance with the provision of Article 229(8) and Standing Order 186 of the Homa Bay County Assembly Standing Orders. Committee proceedings. The committee held its first meeting on 26th March 2025, where resolutions was arrived at to invite the Homa Wasco management team to appear before the committee on 30th March to respond to the concern raised by the Auditor General. On 30th March 2025, the executive County Executive Committee member for Water, Environment, Sanitation, Forestry and Climate Change, the Managing Director of Homa Wasco, the Finance Manager, the Technical Manager, and the Accountant appeared before the committee to respond to the audit queries raised by the Auditor General. Guiding principles. The committee, while executing its mandate, was guided by constitutional and statutory principles on public finance management, as well as established customs, traditions, practices, and usage. These principles include the following: constitutional principles on accounting finance, direct personal liability, obligations of accounting officer, Honorable Speaker, acknowledgement. May I take this opportunity to thank all members of the Public Accounts and Investment Committee for their input and valuable contributions during the deliberations. The committee also takes this opportunity to thank the Office of the Speaker and the Clerk to the County Assembly of Homa Bay for logistical supports accorded to it during the exercise. We are also appreciative of the Secretariat attached to this committee for their support throughout the report writing process. It is therefore my pleasant duty on behalf of the Public Accounts and Investment Committee to present the committee report on the report of the Auditor General on Homa Bay County Water and Sanitation Company for the year ended 30th June 2024. Honorable Speaker, the report of the financial statement had qualified opinion. Basics of the qualified opinion. The first question raised was unconfirmed responsibility, plant and equipment balance. The statement of financial positions reflects a property, plant and equipment balance of Kenya shillings 210,654,674 as disclosed in the notice in note 10 to the financial statement. However, the review of the property, plant and equipment scheduled as at 30th June 2024 revealed that land and buildings of unknown values owned by the company were not disclosed. Management did not provide explanation for this omission. In the circumstance, the accuracy, completeness and fair representations of the reported property, plant and equipment balance could not be confirmed. Management response. Honorable Speaker, the management concurs with the auditor's observation that land and buildings used by the company were not disclosed in the financial statement. This was because the said assets are still owned by the national government through Lake Victoria South Water Works Development Agency and have not been transferred to Omawasco. The ownership, valuation and depreciation is also done by them. A list of assets operated by Omawasco but owned by Lake Victoria South Water Works Development Agency has been provided. Committee observation. Honorable Speaker, the financial statement reports a property, plant and equipment balance of Kenya shillings 210,654,674. The review of the PPE scheduled on 30th June 2024 reveals that the company land and buildings were not disclosed and their values remains unknown. This omission contravenes the international public sector's accounting standards. Property standards IPSAS 17, property, plant and environment, which requires entities to recognize and disclose all assets under their control. Omawasco management acknowledged that these assets are still owned by the Lake Victoria South Waterworks Development Agency and have not been formally transferred to Omawasco. This lack of formal ownership documents raises concern about asset control, financial reporting accuracy, and potential statements in the company financial position. Consequently, the completeness, accuracy, and fair representation of PPE balance remains unverified. Committee recommendation. Honorable Speaker, Omawasco management need to expedite the transfer of ownership of all assets currently registered under the Lake Victoria South Waterworks Development Agencies, other agencies and individuals in compliance with Section 143 of the Public Finance Management Act 2012, which mandates proper accounting and reporting of public assets. Number two, Omawasco management is required to develop and maintain an updated asset register and valuation report for all its property, plant and equipment within 90 days from the date of adoption of this report, in accordance with the Regulation 197 of Public Finance Management. That's the County Government Regulation 2015, which obligates public entities to maintain complete and accurate asset records and supported long outstanding payables. The statement of financial position reflects trade and other payable balance of 127,722,523, which, as disclosed in Note 18 to financial statement, includes accrued audit or fee of 2,255,210, accrued levies of 24,401,401, accrued Warma levy of 3,513,972, accrued WASPA subscription of 660,000, and accrued WASREB levy of 8,194,702, which were not supported by invoice and have been outstanding for more than 2 years. Further, management did not provide a satisfactory explanation for failure to pay levies in due time to avoid interest and penalties for non-compliance. This is contrary to Regulation 41(2) of the Public Finance Management County Government Regulation 2015, which requires debt service payable to be a first charge on the county revenue fund, and the accounting officer shall ensure this is done to the extent of possible that the county government does not default on debt obligation. In the circumstance, the accuracy and completeness of the payable totaling to 39,035,315 could not be confirmed. Management response. Honorable Speaker, the management stated that all the necessary invoices and letters have been provided to confirm the outstanding amount. Due to cash flow challenges occasioned by the low tariff, it was possible to remit the payment in time. Currently, the company has reviewed its tariff, which has since been approved by the WASREB, and awaiting the settlement. The new tariff will help the company cut costs and increase revenue, leading to prompt payment of the company obligation. A payment plan has been agreed on between the management and WASREB, which the management has continuously honored. Further, the management has also agreed on payment plan with the Office of the Auditor General to clear the outstanding audit fees. Lastly, the company has conducted a joint reconciliation exercise which with the other agencies WASPA, LSBWB or WARMA, and intends to enter into payment plans immediately after the implementation of the new tariff. Committee observation. Honorable Speaker, the accuracy and completeness of the trade and other payables totaling to 39,035,315 could be confirmed as the committee validated the supportive document presented. Key liabilities including accrued audit fees and various levies have maintained outstanding for over 2 years. The management provided satisfactory reasons for the delay in settling these obligations. Consequently, the liabilities of the of the reported payables is obligated. The management was satisfactorily responded to. Committee recommendation. Honorable Speaker, Homa management needs to adhere to Regulation 41(2) of the Public Finance Management County Government Regulation 2015, which prioritizes debt service payments and supported deferred income. The statement of the financial position reflects deferred income balancing of 178,654,201. However, the management has not explained the source and the nature of the balance with appropriate documentation. In the circumstance, the accuracy and completeness of the balance could not be confirmed. Management response. Management concurs with the auditor observation that there was no explanation provided on the source and nature of deferred income balance in the financial statement. However, the deferred income of 178,654,201 is explained as follows. The assets have not been capitalized during the period as shown from the assets register. Upon completion, the assets will be capitalized in the subsequent financial year. Further, a table of the deferred income has been availed. Committee observation. The deferred income balance of 178,654,201 has been validated with supporting document. Management has clarified that the amount relates to assets that have not been capitalized during the period but will be recognized upon completion in the subsequent financial year. Accordingly, the accuracy and completeness of the balance are now substantiated. Honorable Speaker, Committee recommendation. Homa management to fulfill disclose all sources and nature of income during the presentation of financial reports in compliance with Section 81 of Public Finance Management Act 2012, which mandates that all public entities prepare and present financial statements that give a true and fair view of their financial position, including complete disclosure of revenue sources. Further, the management to comply with the IPSAS 1, presentations of financial statement, which requires full transparency in financial reporting to ensure accountability and informed decision making. Honorable Speaker, honorable members, material uncertainty relating to going concern. Note 4 to the financial statement indicates that the company made a profit after tax of 4,221,741. 2023 loss of 8,047,423. During the year, which resulted in the accumulated loss totaling to 34,308,616 in 2023, Kenya shillings of 49,423,04. However, this accumulated losses differs with the corresponding accumulated losses retaining earnings of a totaling of 42,869,710 and 38,530,357 reflected in the statement of financial position. Further, the statement of the financial position reflects total current liability of Kenya shillings 318,123,220, which exceeds the total current assets of 105,154,790 by Kenya shillings 212,968,430. The ratio of the current asset to current liability is 0 to 33 to 1, while the recommended ratio is 2 to 1. The unfavorable financial status implies that the company may not be able to meet its obligations, and when they fall due. Further, this condition, which indicates existence of a material uncertainty relating to ongoing concerns, has not been disclosed in Note 4 to the financial statements. In the circumstance, the disclosure of the existence of material uncertainty relates to going concerns is both inaccurate and inadequate, and the company is technically dissolved, and its continued existence as a going concern is dependent upon its creditors and the company and the county government of Homa Bay. Management response. Honorable Speaker, the management stated that as explained by Note 17 on retained earnings, the company reports an accumulated loss of 38,530,357 in the financial year 2022-2023, and Kenya shillings 42,869,710 in the financial year under review. However, the figures were erroneously captured in the explanatory note 4 as Kenya shillings 49,420,304 and Kenya shillings 34,308,616 for the financial year 2022 and 2023 and 2023-2024 respectively. It should be noted that the misstatement in the explanatory note did not affect the financial position of the company. Further, the current liability of Kenya shillings 318,123,220 is inclusively of deferred income of Kenya shillings 178,654,201, which eventually will be capitalized in the subsequent financial year upon completion of the projects being undertaken, further increasing the liquidity ratio. In addition, the company has been operating on unsustainable tariff which could not allow the company to break even. The tariff review has been approved and it will enable the company to start meeting its obligation. New plans and last mile activities is being done with the aim of increasing revenue, which will in turn improve the cash flows. An improved growth in profits is an indication that the company has started breaking even, as the surplus will be used to meet the financial obligation. The management has put more emphasis on cost reduction measures and reductions of non-revenue water, and its saving can be used to pay the outstanding debt, hence improving the current ratio. Committee observation. Omawasco financial position raises concern regarding its ability to To continue as a going concern, while management acknowledge misstatement in explanatory notes, the financial statement still reflects material inconsistencies in accumulated losses. Additionally, with a current ratio of 0 to 33 to 1, well below the being below the recommended of 2 to 1, the company faces liquidity challenges as its current liability significantly exceeds the current assets. Through management attributes part of the liability to deferred income, the company remains technically insolvent. Its continued operation depends on creditor support, financial backing from the county government of Homa Bay. Furthermore, the omission of material uncertainty in Note 4 renders the disclosure inaccuracy and inadequate. Committee recommendations. The Homa management needs to immediately implement financial restructuring and liquidity management measures to improve its solvency. This includes capitalizing deferred income as planned, reducing non-revenue or water loss, and prioritizing debt payments to improve the current ratio. The management to enhance financial reporting accuracy in compliance with Section 163 of the Companies Act 2015 and other related laws, which mandates companies to prepare a financial statement that gives a true and fair view of their financial position. The county government to consider financial intervention such as restructuring the company's debt or providing a conditional grant to stabilize operation. Additionally, the county government needs to ensure strict oversight and compliance with Regulation 61(2) of the finance management and Regulation 15, which requires county government to support the financially distressed entities while ensuring their suitability. Honorable Speaker, honorable members, variance in irregular use of refundable deposits. The statement of the financial position reflects refundable deposits balance of Kenya shillings 11,746,496. While bank statement for the customer deposit accounts at cooperative bank indicates a credit balance of 26,414 as at 30th June 2024. The result variance of 11,728,082 represent customers' deposits that management has irregularly used to finance company operations. As a result, the company may not be in a position to refund the customer's deposits when they come due. In the circumstances, the accuracy and existence of the refundable deposits balance of Kenya shillings 11,746,496 could not be confirmed. Management response. The management concurs with the auditor observation and stated that this was an internal borrowing to resolve the exigency need to supply water to Homa referral hospital Makongeni Health Center, Rachuonyo North Sub-County, Mbita Level 4 Hospital, and Rachuonyo Sub-County Hospital. Further, the management stated that let me take it again. Further, the management stated that with the new tariff in place, the company has elaborated a plan to repay the deposits into the account on monthly basis until it's brought to normalcy. A copy of the company internal borrowing policy and an extract of the minutes of the board of directors and approved payment plan were availed to the committee for verification. Committee observation. The company irregularly utilized customers' deposits amounting to 11,720,082 to finance its operations, resulting to significant variance between the reported refundable deposits and the actual bank balance. This misuse of customers' refunds raises concerns about the company's ability to refund deposits when due. While management acknowledges the issue and has committed to a repayable plan, the accuracy and the existence of the refundable deposits balance of 11,746,496 remains unconfirmed. Committee recommendation. The Omawasco management to cease misuse of customer deposits and resort the refund to the designated account to ensure compliance with Section 162(1) of the Companies Act 2015, which mandated accurate financial reporting and safeguarding of liabilities. Omawasco management to adhere to Regulation 93(4) of the Public Finance Management or County Government Regulation 2015, which prohibits the use of restricted funds for unrestricted purpose. Failure to comply may result to legal and financial consequences, including potential regulatory actions and loss of public trust. Budgetary control and performance. The statement of comparison of the budget and actual amount reflects receipt budgets and actual on a comparable basis amounting to Kenya shillings 243,725, 686,686, and Kenya shillings 143,685, 625, 111, resulting to underfunding of a Kenya shillings 100,100,574, which is around 41% of the budget. Further, the company spent a total of 117,071,892 out of the actual revenue of Kenya shillings 143,625, 111, resulting in underutilization of revenue by a Kenya shillings of 26,553,219, which is 18% of the actual revenue. The underperforming under expenditure and underutilization of available funds affected the planned activities and may have negatively impacted provisions of water to the residents, of Homa Bay. Management response. The management stated that variances in the revenue arose from non-receipt of budget from the government grants, DUNEA, and Water Trust Fund of Kenya shillings 65,756,780. Low water sales due to restrictions of water pipes during road construction, vandalism of water infrastructure, and old dilapidated pipes amounting to Kenya shillings 227,093,710. This resulted to under-obligation of the budget, under-absorption of the budget. To improve on the revenue, the company has revived its tariff, which has since been approved. Deployment of water police to minimize vandalism, and reconnection of destroyed lines. Further, the management will ensure watertight agreements with the donors and only budget for assured funds. Committee observation. Homa management experienced revenue variances due to non-receipt of the budget government grants of which is totaling to 65,756,780, and low water sale amounting to 27,094,710, attributing to infrastructure challenges such as vandalism, road construction damage, and aging pipelines. While management has outlined corrective measures including a tariff review, enhancing security, and reconnection efforts, the financial impact of these variances highlights weaknesses in review of forecasting and infrastructures resilience, strengthening financial planning, and securing firm commitment for donors. Firm commitment for donors will be crucial to prevent future budget shortfalls. Committee recommendations. Honorable Speaker, Homa management needs to strengthen its revenue forecasting and budget planning by ensuring that only confirmed government grants and donor funds are included in its budget. This will align with the section 197(1)(2) of the Public Finance Management Act 2012, which requires statement cooperation to operate within state corporation, which requires state corporations to operate within realistic revenue and expenditure estimates. Continuous proactive infrastructure maintenance and security measures needs to be implemented to reduce loss for vandalism and pipeline damage. The county government needs to allocate sufficient resources for maintenance and security of all critical water and sanitation infrastructure to prevent revenue loss caused by vandalism and aging pipelines. This is in line with the section 104(1)(a)(d) of the County Government Act 2012, which mandates counties to ensure efficient and suitable services delivery, including water supply system, trade, and other receivables. Honorable Speaker, honorable members, the statement of the financial position reflects a trade and other receivable balance of Kenya shillings 89,344,007 as disclosed under note 13 to the financial statement. Review of the documents and records in support of the balance revealed the following anomalies. 1. 71,371,471, out of which 69,561,674, 694, which is 98%, was in respect of customers whose debts had remained uncollected for over 60 days, contrary to the company bill settlement period of 7 days upon receiving the bill. No evidence was provided to confirm that the company has made any effort to recover the long outstanding debt. Further, number 2, further included in the balance was Kenya shillings 89,344,007 is an amount of 9,673,733 in respect to other receivables. However, no documentary evidence was provided to confirm from whom this balance was due and the nature of other receivables. Number 3, Roman 3, the trade and other receivables balance of 3,302,079 being VAT input assets, which was an open balance adjustment that was not explained. The overdue debts amounting to 89,344,000 averted effects of the liquidity position of the company, thereby hampering services delivery to the residents of Homa Bay municipality. Management response. Management responded as follows. 1. The company has established a credit management department to manage the company debts. In addition, efforts to collect the debts owned by customers is being made by the water police unit. A number of the demand letters have been issued to the clients for payments. The management further stated that other receivable rates to receive rendered to the county executive office by use of water buzzer and exhausters, which have since been settled. The documents relating to this amount of 9,673,733 were provided for confirmation by the committee. Roman 3. Moreover, the management has undertaken a reconciliation with the Kenya Revenue Authority on their input value-added tax, VAT utilization. The committee observation that the accuracy and recoverability of the trade and other receivable amounting to 89,344,007 remains in doubt due to significant overdue debts, lack of supporting documents for other receivables, and unexplained value-added tax, input adjustment, the prolonged outstanding debt, which makes up to 98% of the trade receivables, indicates weak debt collection efforts, potentially training the company liquidity and affecting service delivery. The management has initiated collection measures and provided some documents. The effectiveness of these efforts and resolution of VAT reconciliation remains unverified. Honorable Speaker, honorable members, committee recommendations. Omawasco management has to strengthen its debt collection mechanisms by enforcing strict credit control policies and taking legal action against defaulters to recover outstanding debts. This is in line with Section 157(1) of the Public Finance Management Act 2012, which requires state entities to manage revenue efficiently and ensure timely collections. Consumables, the accounts which with long overdue balances should be reviewed for potential provisions or written off as per the accounting standards. The county government needs to ensure that all service rendered to its offices are promptly paid to avoid accumulative receivables that affect Omawasco liquidity in compliance with Regulation 109(2) of the Public Finance Management and Regulation, County Government of Regulation 15, which indicates timely settlement of obligations to prevent financial distress in public entities. Unsustainable wage bill. The statement of profit or loss and other comprehensive income reflection employees cost of a total of 36,862,433 as disclosed in Note 4 to the financial statement when compared to own generation revenue of a Kenya shilling 68,137,121. The wage bill continues of 54% of the total own generated revenue. The promotion,
Somebody
I'll take it again.
Continue.
The proportion is very high, dependent on the goodwill of the county government and other donors to meet its operation cost, while it ought to be making profits and self-sustaining. It is not unclear